Today's video, I'm going to talk a little bit about triggers and how to sneak into a swing trade. Okay, so there was a setup in Adobe where you had the larger general pattern of higher highs and higher lows. You also had some timing factors for a possible low that were coming in. We had price above the 200 simple moving average. You were kissing the 50. And we wanted to look for some buy triggers here because we know that if it held one of these areas that we could look for a 1272 extension as a target for the trade. So we ended up testing one of the lower levels of support in Monday's session. And typically for a swing trade, the aggressive swing trade trigger is the 15-minute crossover with also taking out a prior swing high. Now I use the 834 EMA crossover, so here's where it would have crossed over here, so it was closer to the 263 area, and in the process it also took out a prior swing high, which is what you want to see because you want to see a pattern shift from lower lows and lower highs to higher highs and higher lows to confirm that, you know, that support might be good. So let's say that you would have gotten in somewhere around the 263 area for a swing trade. Well, yeah, it's good because, you know, it's continuing to rally and follow through from there. But is there a better way? If you are in front of the monitors during the trading day and you want to sneak into a potential swing trade entry, you can actually start with using the day trade triggers. So for example, let's say you used a 2-minute chart trigger. You know, after it hit and held support, you had that crazy old spike here, but then you took out a prior swing high and you had the moving average crossover over here. So that would have gotten you in closer to, let's say, the 261 area, where your risk was going to be just pretty much underneath this last low, which is 257.07. So there you're going to be risking a few bucks, but potentially for a move towards this 283 area. So the risk to reward is pretty good if you do it that way. Now the idea though is if you sneak in on a day trading trigger, that you want to make sure that by the end of the trading day it has also triggered for a swing trade either on the 15-minute or the 30-minute chart. So that's kind of how you sneak in using the shorter term parameters. And then, you know, if you didn't get the swing trade trigger to also fire off by the end of the day, then you could just, you know, exit the trade by the end of the day. Okay. So anyway, the way you make money with my work is setup plus trigger equals trade entry. Then you manage it. This was a setup. There was time and price. And then I just gave you a couple examples of triggers. And now you just manage it. You know, your initial stop would have been either underneath the low or underneath the low end of the zone. Then you can go to a break-even stop when possible, and then trail it as you go.